do with UK assets now? And you still have sterling dropping like a stone, high inflation, and potential rate hikes.
Yeah, so I mean, there's lots of headwinds for the UK. I completely agree. In the near term, look, I maybe take a step back as well. I mean, one of the reasons for this higher inflation is because the recovery has been pretty good, both in the UK and the rest of Europe. You've recovered back up more or less to your pre-pandemic levels of GDP. Demand is very, very strong, and it's hitting some of these supply bottlenecks. Now, I do think some of them will be more persistent than a few months. But we've just seen the end of the furlough schemes in the UK. That sort of will release potentially a bit more labour supply, may ease some areas. And I think I also agree with the comments about property rights, rule of law, a government that's very keen on investment as well. And we have a fiscal event at the end of October, which again, I think the government will be looking to emphasise research and development, more investment, sort of bringing up productivity growth.
Okay, but let's talk about the UK, therefore, in a bit more detail, because, and I want to take us back to the conversation I had with Luke Ellis. His concern is that central banks do react to this inflationary story, that they do tighten into it. There is a danger in the UK that we're tightening into weakness, i.e. the economic momentum fades, but because of the inflation narrative, the bank is forced to act. That's a fairly toxic combination.
Yeah, I agree. So, look, we think that the Bank of England will raise rates in the first half of next year, be one of the first key central banks to do so. We're looking for them to start raising in May, but to do so pretty slowly, get up to 1% by the end of 2023. So very cautious in the light of these sort of higher inflationary measures that are coming through, but also in the light of the pickup of demand. I mean, there is a risk that they go earlier than that, even by the end of this year. And I think that would be tightening into a period where we still don't have the information about the labour market post the end of furlough. So I think it would be sensible to wait for that.
In terms of the potential for longer term opportunities there, and then I guess also in Europe, you mentioned banks. And I wonder where the biggest opportunity in banks is going to be, as now kind of everyone's allowed to raise their payout. How do we know what the differentiator is going to be?
Yeah, you mean sort of actually start paying dividends?
Yeah.
Yeah, I mean, that would be great for European banks, because look, European banks are not fast growth. I mean, they're very low growth as a sector. So really, what do you get when you invest in banks? What do you want to have? You want your cash sort of returned to you a reasonable yield. So that dividends is really, really important. I guess by forcing them to cut their dividends, it's improved capital. And the banks have actually performed pretty well this year. I think partly because of economic recoveries, and partly because capital positions have been good, and partly because they are now going to be able to start paying dividends. And the dividend yield on the bank sector in Europe and the UK is extremely good. 5-6% dividend yields. As I say, you're not going to get a huge amount of growth, but that is a very, very good sort of comparative yield, particularly, again, going back to comparisons with other asset classes. Other thing with banks is they probably will like a little bit higher interest rates. I mean, this has been a problem for them in recent years. They've had no margins. Right.
Sharon, why wouldn't you own US banks? It looks like we're going to get higher rates in the United States. It looks like, as you just said, we're going to get higher rates in the UK. Why would you own European banks when it looks like rates are going to remain on the floor? The ECB looks like the least likely of the major central banks to be hiking.
Yeah, so I think UK banks are quite interesting. I mean, obviously, they form quite a big part of the pan-European banking universe. And I do think they're getting a bit more interesting, as long as UK growth is okay. And because of better growth, not just because of slightly higher inflation, the Bank of England starts raising rates sort of towards the end or middle of next year. I think that would be really good for the UK banks. The mortgage market should be reasonably healthy as well, with the strength of the housing market too. So we do quite like some of the domestic UK banks. And then comparisons with the US banks are obviously a bit more expensive. We also think the Fed, I know the market is now sort of expecting the Fed to raise rates quite early, maybe into next year. We think that they'll wait until 2023